To know as well that we have recorded all of the webinars, and they are available on slcchamber.org. We've also just launched a YouTube channel that can be found by Googling St. Lawrence County Chamber YouTube, and we are starting to put the webinars up on there as well to make that easy for folks to get the information. You'll notice we're going to switch over to the presentation slide, and I can point out a couple of housekeeping things for you to orient to the presentation. You'll see on the presenting slides there on the top right-hand corner, there's a box with 4 arrows. You can click on that to make the presentation full screen if you'd like, and then click on it again to minimize it if you'd like. That's just an option there throughout, and Angela will take us through the presentation as you follow along. So we're going to get started. We do have a couple more people joining the room, but we do try to keep this to the lunch hour of noon to 1 with questions and answers throughout, and then at the end, as I mentioned. We really enjoyed putting on these presentations because it gives a chance for everybody across our very large county to tune in and gain information. It's not always easy to get to a physical place for training, but there's so much information for all of us to know. So again, we thank you, and we do hope you'll take advantage of the recordings on our website, slcchamber.org. I wanted to thank Laura Perry from Clarkson University for hosting the webinar on their platform and assisting us with this initiative for members, and also want to thank St. Lawrence University for being a sponsor for this educational series. We're now going to get started, and I'd like to introduce our presenter today. Many of you may know her. Angela Gray is a certified public accountant and principal in the firm of Hoffman Eells Gray CPAs. As a public accountant with over 15 years of experience, Angela assists individuals, small businesses, and not-for-profits with their financial and tax needs. She's a member of the American Institute of Certified Public Accountants and the New York State Society of Certified Public Accountants. She has a Bachelor's of Science degree in accounting and a Master's of Science in Management Systems, both from Clarkson University. She resides in Waddington, New York with her husband and daughter, and they have offices in Canton, Messina. She can tell you a little bit more. I know with their expanded network, they have offices all across the North Country now. So let Angela take it away, and again, I encourage you all to write in your questions throughout the presentation.
Thank you, Brooke, and welcome to all of our participants today. As Brooke said, we're going to give you some tips on how to make tax time a breeze, which is always a fun time for everybody. As we do go through the presentation, no question is too small, so chances are if you're thinking of it, somebody else is, and to follow up on what Brooke said, I do encourage questions and do not mind the interruption. So of our participants today, we did a poll of how often we're working on bookkeeping, and half of you are answered B, 1 to 2 days per week. Some are doing it at the end of the year, and some are doing 3 or more days per week. And so as we go through this, hopefully there'll be some tips to help you do it for those who are doing it at one time, more frequently throughout the year, and maybe those that answered A to scale back the amount of time it is taking you to do your bookkeeping. So the best way that if you don't have a bookkeeping method or you want to upgrade your bookkeeping method is just to do it. Imperfect inaction is better than perfect. Imperfect action is better than perfect inaction. So just do something. Many successes are built out of failure. So let's get started and talk about starting a bookkeeping process. And what do we need to do? The first thing to recognize is that our business should have its own checking account. If you're a corporation, which some of our participants are today, you're mandated to have a business checking account. But for our participants that are sole proprietors, there really is no rule about this other than it is best business practice. If we keep our personal side out of it, we should be very clearly able to see as time goes along how much cash we are generating from our business and You'll hear me say this many times throughout the presentation, but you do need to reconcile your checking account monthly and all of your bank accounts monthly for different reasons, and we'll get into the details of that as we go through. So once we have the bank account set up, we now need to decide how we're tracking our income, our expenses, and all the inflows and outflows. And so do we use a manual system or do we use a computerized system? And we're going to walk through a couple different options that are available to businesses. And then just be mindful that it works best if you enter your data in a summary format. We don't need every single line item from a receipt. That would also speed the process along for bookkeeping. So that's just a few tips on getting started. And as we look at the next slide, we take a look and we say, okay, what do we need to record? And we have the assets listed first. Assets are things that the business owns. We own our cash account, we own equipment, we may own inventory if we're reselling goods to another individual or business. That's our inventory. So we want to make sure we have a very good system to track all of those different items. The liabilities is what we owe to different people. We may owe the bank an operating loan or a line of credit. We have different vendor bills that are coming in every month in our business, whether it's for goods for resale or utilities or office supplies. We want to have a mechanism that we can track all of that as well. And with all of that, we would obviously track our income and our expenses, which is the crux of what is needed at tax time. So let's look at recording the income and expenses. When we talk about recording income, we want to record the date that we made that sale, the amount of the sale, and who we sold it to, if we can. Some of us run cash businesses where we're just dealing with cash. People are walking in our door. We don't really need to know who the customer is, but other businesses may have contracts where the customer and who's buying our services is important. We would want to track our deposits by category to avoid paying tax on deposits that is not income. So we're going to obviously pay tax on our sales when we sell our goods or services to another person. But we're not going to pay tax on the deposits that come into our bank account that is a loan or an owner investment. Sometimes a business owner may take their 12-month bank statements at the end of the year and add up all their deposits and forget that throughout the year, 1 week payroll, there wasn't enough money to cover payroll, so they put $2,000 of their own money in there. That should not be included as a taxable deposit, so we need a record-keeping system that allows us to separate the different deposits that we make. So when we're making sales, we may not get paid right away, and we have customers that charge or put things, quote, on account, and that we term technically as our accounts receivable. When we talk about income, if our business is doing that, we need to recognize on a weekly basis who owes us money and continuously follow up on that, because the longer the money sits owed to a business, the harder it is to collect. And so as far as the expenses go, and what we would want to know as the expenses is the date we had that expense, the amount that it cost, the purpose of the expense, and who we paid that money to. A lot of small businesses and really large businesses as well are required to do 1099 reporting at the end of the year. And so if we're paying, let's see, we have a repair job done to our building and we've paid the repair company $1,200 to fix, say, a leaky roof, we would need to, at the end of the year, in certain circumstances, issue that vendor a 1099. And so that's some of the stuff when we talk about keeping track of a vendor. What we also need to know would be that vendor's federal ID number, their name, their address. So with that in mind, as we think about what our bookkeeping system should be, we should be able to track that information as well. We would want to, in certain circumstances, as we're paying a bill or a vendor, know the account number for which we're paying. If we have a rental property and we're doing the bookkeeping for that, we may have various national grid bills all bearing a different account number. So we'd want to make sure our bookkeeping system can track all of those different account numbers. We would also want to be able to devise a system where we can track our expenses by category. At the end of the year, when you file your tax return, the IRS has some prescribed categories on the taxes, such as advertising, commissions, insurance, interest, office expense, rent, etc. But there's many other categories that we may want to add for management, from a management standpoint. So just keeping in mind the end result of what we're going for, we want to be able to have a system that allows us to track things by category that would easily flow into our tax return at the end of the year. One of the tips that we would put out there is to use one credit card solely for business. With sole proprietors, we often see they have a credit card that they just use for everything. And what makes it really challenging at the end of the year, and even running a business month to month, is they could owe $5,000 on that credit card, but really only a couple thousand of that belongs as a business expense. So it just muddies the waters a little bit in that sense. And the second tip that we wish to give you is to avoid dealing in cash. Dealing in cash can be very difficult to track the spending. If you think of a very busy small business owner, they're going to the store and they're buying, maybe a little bit of office supplies for $20, and then they need to go fill the company vehicle, so they go and they put $60 of gas in the car. All done in cash. Then they're on to the next project or visiting with the next customer, and they forgot they have these receipts. They're in their pocket, and Lord knows where they go from that standpoint. So if we calculate this and we say, okay, well, on average, we're just kind of spending $30 of cash a day, $150 a week, no big deal. But if you annualize that, that could result in almost $8,000 of lost deductions on your tax return a year. So if we use our debit card instead of cash, or we use the one credit card, we're ensuring that we're getting the maximum amount of deductions on the tax return at the end of the year, and avoiding what we would call lost write-offs that are legitimate business expenses. Some of the other items that we would want to maintain records for are inventory records. We want to make sure that we're keeping track of when we purchased the inventory, how much we purchased that inventory for, when we're selling it, and how much we're selling it for. If we're in a business that deals a lot with inventory, we're constantly focusing on our profit margins. If we think we're marking our products up 40%, do our records reflect a 40% markup? If they don't, it could be a signal that there's something else going wrong in the business. And in order to have accurate books, what we would need to do is do a physical inventory count. And ideally, we would do this on a monthly basis, close each month's books, and have a monthly report of operations. Understanding that that's an ideal situation and a best business practice, there's sometimes a reality that a lot of business owners just don't have the time to do that on a monthly basis and don't have the resources to hire that done. So as a must, you must do a physical inventory count at the last day of your tax year. For sole proprietors, the last day of your tax year is December 31st, and it should be a very detailed listing of what is on the shelf or in storage to be sold to the customers. And if you're a corporation, you could most likely have a December year end, but it could be a different year end as well. So now that we have all these records, we have invoices to our customers, we have expense bills. What do we do with them? How do we file them? One of the preferred ways is to file all of our vendor information by vendor. Some people file it by the month of the expense. Some people file, we have some clients that file based upon when the check was paid. But I always have found it easier to file by vendor. If we just take a simple scenario, and let's say we receive a National Grid bill and we don't really feel that the balance is accurate. If we're filing by month, we've got to go through, if we're in the month of November, 10 folders to pull 10 different National Grid bills. But if we do this by vendor, we can just pull the National Grid file out of our file cabinet and quickly access that information. So my personal preferred method is to file our expenses by vendor. Some file it by category, so they keep all the utilities into one folder. There's certainly not a one-size-fits-all approach to bookkeeping, and the size of your business is often the most important indicator of how sophisticated your method should be. So you really have to find out what works for you and for your business. For the sole proprietors in the room, and possibly some corporations, some of the other items that we would track would be our mileage, how much mileage we have business versus personal, and our annual miles driven per year. And one of the other beneficial things to track would be overnight travel. And so moving ahead to the next slide, we want to develop a system that works. And as I said, it's not a one-size-fits-all approach. They can be very, very simple systems or very sophisticated systems. The one we do not recommend is the shoebox system, where we just put everything in the box, and at the end of the year we worry about us sorting it through or frantically bringing it into our accountant's office in March and asking them for help because as the client we just haven't had time. So as we go through this list on this slide, they go from very simple to the more sophisticated computerized method. And some of what we've seen in our experience is people simply keep manual folders. They have very small businesses. They have a folder that has all of their income in it, and it may be 20 slips of paper for the year. And then they would have folders for their related expenses. One of the moving up a level of sophistication would be the ledger paper. And what I mean by ledger paper is the green paper that accountants used to use. A lot of us work in a paperless world right now, but it has the various columns on it that we can create a column for each one of our expenses across the top, and down the left-hand side we could enter a check or a deposit and then put it in the appropriate column, sum the bottom of the page, so we have a total for everything that we're doing inside the business. The third selection here is the Dome book. Dome books are spiral-bound books. They're called Dome books because the maker of them is actually the company named Dome. But what they do is they provide a mechanism to, on a monthly basis, record all of your income and expenses. They're easily available on Amazon for sale, and if you follow the methodology behind a Dome book, by the time you get to the end of the year, it's still a manual process. Assuming you haven't made any math errors, you will have a total list of all of your income and all of your expenses for the year that can go into a tax return. So that can be a lot of addition, a lot of subtraction in some cases. So one of the ways to start automating that process would be to use an Excel worksheet. And you can build very sophisticated Excel worksheets or just use a simple worksheet that the math is done for you. You're totaling all of your income and all your expenses within Excel, and it's really customizable to what you need as a business owner. And moving ahead to computerized accounting systems, there's many, many available online. I mentioned two of them here. One is QuickBooks and the other is Xero. And some of the other big names in the space of accounting software are Sage or Peachtree. And then for online versions, there's FreshBooks, Zoho, and Wave. And there's a lot of up-and-coming smaller companies in this space right now. The two that we focus on in our firm would be QuickBooks and Xero. Right now, QuickBooks is dominating the United States and Canada. They have a cloud-based system that when Intuit, the makers of QuickBooks, first introduced this, it was years ago now, and it was less than ideal for a lot of small businesses. It didn't truly work very well. They've made a lot of improvements to this program. It's coming along, and the current cloud-based version is actually something a decent-sized business could use. It works very differently from a user interface perspective than what the desktop does, but QuickBooks still does have a desktop version that you can load on your computer. The data always resides with you. You do not need internet access to use it. You can just use it wherever your computer is. Xero currently is dominating New Zealand, Australia, and the UK. but it's an up-and-coming accounting program in the United States. It's a completely cloud-based program. It works in sort of an app-based environment, and it integrates with over 500 business applications that small businesses are currently using. And some of those are very large companies that most everybody has heard at least: Microsoft, Google, Bill.com, Square, a lot of young entrepreneurs, and even businesses just looking for an easier way to do business in a mobile environment are using these apps. And Xero is now available to be the central accounting system that these apps can feed into and start tabulating all your information. Key features of both of these programs, while they both do essentially the same thing, different aspects are done better in one than the other, but they allow for automatic banking and credit card fees to be imported directly into your software. They allow to invoice your customers, do your vendor payments, track your expenses, keep track of your fixed assets. So those large pieces of equipment that you're buying, the building improvements that you're making, both of these software packages will do that for you. If you're a business that wants to use purchase orders, they'll do that as well. And naturally, they each allow business reporting, so we can keep our eye on how well our business is doing throughout the year. So the next question that we would ask is, okay, I have my system and I'm ready to go. I have my bank account. Now, what records do I need to maintain? And on the left-hand side, we've included the common business records that a typical business would need, and there's certainly more things that could probably be on this list. Again, it depends on the business, but naturally our income and expenses, but our major purchases of equipment and building improvements, etc., would also want to keep records for those. Any loan documents that you have from the bank, you would want to keep those, provide them to your accountant in the year that you get the loan to help facilitate the processing of your tax return. You want to maintain all your monthly bank statements. I cringe when I hear a client say they throw them away at the end of every month because it's reconciled and there was no problems. That is definitely something we do want to keep as part of our business records. And then also our inventory. Personally, we just created a very simple list of some common things that you would keep track of for your personal tax return. You know, your medical expenses, if that would apply to you, real estate taxes, anything you're spending on education or charity as well. And often, personally, professionally, we're asked the question as the CPAs, what's important, what do I need to keep, and how long should I be keeping this stuff for? So we have a simple list that says our forever list. We should always keep copies of our tax return. We should always keep copies of our mortgage papers, even the ones that show that the mortgage has been paid off. You know, in celebration, we might want to destroy this, but we should be keeping those. Our property records especially, you know, we tend to hold property for a very long time. We may pass that property on to a second generation, but inevitably that property will be sold at some point in time. And from a tax perspective, we need to always know how much you bought that property for and how much you paid for it if you've done any major improvements to it. So one of the challenges that we see in our practice is if somebody's held the property for 30 or 40 years, they really don't think about keeping those records forever, but they should be on our forever list. When your accountant prepares a financial statement for you, they would come to you nicely packaged and bound. Those should also be on our keep forever list. And then any documents that pertain to major purchases or sales of equipment, we would recommend that you keep those forever as well. On our 6-year list, we would keep track of our canceled checks for 6 years. Banks used to be a lot better about giving these back to you with your bank statement. We rarely see that anymore. if we do get a copy from the bank, it's a little tiny copy enclosed with a bank statement. But if you are receiving those, you should keep those. We want to keep the bills to our customers in different contracts for 6 years. Our certain payroll records we would want to keep for 6 years. And then the vendor and employee payment vouchers are also on the 6-year list. There's many other things that would fall into this 6-year category. Typically, the IRS can audit a return for 3 prior years. There is a little asterisk there. They can go longer if certain requirements are met, but certainly on our general business records, which canceled checks become the invoices and the payment vouchers, if we're keeping them for 6 years, we should be okay to meet that 3-year statute should you win the lottery with the IRS and receive an IRS audit. The 3-year list is less important. Business records still important, but our expired insurance policies, I'm not sure that many businesses think about keeping these, but we should keep them. Our time cards for an hourly employees, if you have 10 employees and they're handing in a time card every week, that stack of time cards could be adding up, taking up space quite rapidly. So really a 3-year recommendation on that. And then any general business correspondence you would have, whether that be correspondence to a customer or a vendor, just like the term says, general correspondence, we would want to keep that only for 3 years. The 1-year list is very short. One of the things that we have included here are duplicate deposit slips. If you use a deposit mechanism in your business where you give the white copy to the teller and you keep the yellow copy in your records, again, one of those things in our businesses that starts to grow and take up space, we really do only need to keep those for a year. And importantly, what do we do with what we don't need to keep? Some offices that we go into, they have a just in case I need it pile that sometimes is bigger than the pile of I do need to keep this because they've kept everything just in case. But our recommendation would be to maintain the organization that we would want to be proficient and efficient, and shred whatever you don't need to keep. And shredding is advisable just for security reasons. So the idea of the bookkeeping system that you designed for your business is somewhat twofold. We certainly do want to make tax time a breeze, but as small business owners, we're wearing many, many hats, and it's a little bit cliche at this point in time, but we truly are the marketing department and the HR department and the accounting department, and we get so busy doing all these things that we forget to plan for our own success and our own needs in business. And so we need a system that makes this planning process somewhat automated for us. And it allows us to plan for significant expenses ahead of time. From experience in working with our clients, it seems as though when the clients need the money, it seems very stressful to get that bank loan. But if they're able to plan ahead, they would either have the cash there or know they need the bank loan and can approach the bank before it has reached a somewhat crisis situation. So planning our expenses and doing the proper record keeping would let us know if we have the cash for significant expenses. And it also would help us to see the need to build a buffer for certain times of the year where our business cycle isn't as profitable as other times throughout the year. One of the goals of any bookkeeping system would be a mechanism of which we're setting aside money for paying taxes. Not paying taxes is almost as bad, if not worse, than putting money on a credit card with a high interest rate. So the IRS, when you don't pay your taxes, they can assess you penalties and interest for not paying and not filing on time. And it's a very expensive way to do business. So we want to make sure that we're always paying the taxes on time and that we have a method that lets us see what our tax liability is ongoing and make sure that we have enough money set aside to pay that. There's two taxes, both payroll taxes and sales taxes, that if we don't pay them, the penalties are steep, but they're also taxes that we can be personally liable for as business owners and can come with civil and sometimes criminal penalties depending upon the size of the debt to the government. So many reasons to plan, and the bookkeeping system is really the best tool that we have to do that. And being consistent, in doing it consistently and not, I started off in January really well as a New Year's resolution. About March, I kind of got a little lax on it, and then the kids got done school, and then summer came, and we were traveling, and now we're getting ready to go back to school, and all of a sudden tax time is here almost, and I have 10 months of bookkeeping to do, and I'm completely overwhelmed and can't start. So that's sort of the cycle from a practical standpoint that we see can happen in reality, because running your own business is very, very time-consuming. The most important meeting that you can have every week is that meeting with yourself. As a business owner, you need to schedule yourself to have some time that you dedicate to organizing your finances, paying your bills, monitoring your bills that you owe vendors, to avoid late or unpaid bills that eventually those excess charges are just eating out of your profits and hurting cash flow. We want to review our cash, take an opportunity to plan how much money you're going to need next week. The 7-day look ahead of cash flow. What do we expect to come in the door versus go out the door? Is there enough? Are there any significant taxes due this week coming up? We also want to review and follow up on our accounts receivable. As we said earlier in the presentation, the longer the accounts receivable is out there, the harder it is to collect, and you deserve to be paid for the work that you do. Make sure you do get paid for that. As part of our monthly, one of these meetings with ourselves monthly, what we want to do is reconcile our bank statements. Banks do make mistakes. If we're one of those business owners who's very, very busy in life and we just log on to the bank and say, oh, today the bank says I have $8,000 in the bank, I'm good to go, and we haven't done a reconciliation in many months, we may not know that we have a large check outstanding that the recipient hasn't cashed yet, that when they do cash that changes your financial picture significantly if we're just going off an online balance. We also want to reconcile our credit card statements and integrate those into our bookkeeping system. Credit cards are very convenient, but we often do a lot of business on them, and all of those charges we would want to be included as appropriate on our tax return at the end of the year. Going back through 12 months of statements come January or February becomes an all-day task that if we just did it once a month, we're taking a couple hours out of our month, and it's a much easier task that way. We want to make sure that we're consistently tracking our deposits and our withdrawals out of the checking account, and every time we record a transaction or we file a transaction, we want to make sure that we're using the same filter or the same category every single time. So if we consistently order our office supplies from a company like Staples, we don't want to record them in our bookkeeping system as office supplies one time and then just general supplies a second time. So we do want to remain consistent of how we're recording different things. And as I said earlier, monitor your invoices. So a lot of information, a lot of things to do, and as a business owner, we have a responsibility to track a tremendous amount of information that sometimes can become very overwhelming. And so one of the recommendations we have, and not just because I'm a CPA, but because we believe in it, is to use a professional. That professional is sometimes the best amount of money that you can spend, and it is an investment in your business. Rather than thinking of just paying the accountant, think about it as an investment in your business. And what a professional brings to the table is their years of experience. Why we would never speak about another client situation. We certainly have a wide array of knowledge from working with so many clients. I mean, our firm has been doing this for 40 years. I've been doing this for over 15, as Brooke said. So we've certainly come across a lot of different situations that may be new to you, but we've seen prior, and we could help you through those, or any professional with experience could as well. We also bring, what we're doing in a bookkeeping system is to make our tax time a breeze, but you have to really know your tax matters that pertain to your business. So are we recording things in a way that help us optimize our taxes? Know our deductions. Should we be keeping all of our receipts? What receipts should we be keeping? If we're a sole proprietor and we're deducting mileage on a tax return, do you need to keep all those gas receipts? No. Maybe the correct answer is no. But if I'm a corporation and I have a small fleet of vehicles, the answer to that question is different. We have a question from a participant of, should we keep receipts for all debit and credit card transactions? And as a CPA, my answer to that would be yes, and that's a lot of receipts. I get it. But if we're constantly using our credit card to buy our office supplies, or we're getting a tremendous amount of stuff off of Amazon with our credit card, we're writing that as a deduction on our tax return. Therefore, we would want to be able to support that with a receipt. So those debit card and credit card transaction receipts are as important as a bill that's put in the mail to you. And how do we handle those receipts? I mean, I know it can be voluminous, and so one of the ways I would handle those is to, those may make more sense to file them in the terms of someone like Amazon by vendor, because we can go to the Amazon file. But if we're constantly charging gas, and we don't really care if we went to the Sunoco station or the Stewart's versus Mobile, we may want to just keep a category for gas receipts, in particular, a folder for that category. So it really does depend on the business and the size of the business, and what makes sense for you. The fact of the matter is, it's important that we just do something with it and not put it in our shoebox. So that's the beauty of the professional, is that they can help you through their experience develop an accounting system that is truly tailored to your business. And ideally, the professional of your choosing should give you advice that keeps you penalty-free, maximizes your deductions that may be unique to your business. Certainly, a retail shop versus a restaurant would have different deductions and possibly different credits that would apply to their business. They should be keeping you updated on changes of the tax law. We had a change on the payroll side effective January 1, 2018. We recently sent this notice around to all of our clients just so they're aware that it's coming up, because the tracking of this change will require some of them to make a modification in how they're doing their payroll record keeping. So, a professional is very, very useful to a small business and should really be considered not an expense but an investment in your business. And in conclusion, just to bring everything together, the best piece of advice that we can give you is just to love bookkeeping and keep calm. It really can be overwhelming if we let it grow. So scheduling that appointment with yourself, again, is probably the best thing that you can do in a small business. For every minute that we spend organizing, an hour is earned. And, when we think about this, it may be hard to see, but let's say, just to put you through a very simple example, we're really unorganized. We know we have a bill coming up from the insurance company. It's due around the 10th of the month. I've got to pay it tomorrow, but I just can't find it. And I realize that after I've spent 10 minutes of finding it. So now I've got to call my insurance agent, get the amount of the bill, ask them to fax me a copy. I have to wait. Presumably that copy is going to come right now. Wait for their fax. Now I can sit down and write a check. That process that should be 2 minutes just took you 20 minutes, and that's one bill. So that's how we gain that efficiency, through organization. And if you don't have a method or your method isn't working, try something new. Just begin to just jump in there full 2 feet and just begin something that will work for you. And considering the needs of your business is paramount. The way your colleagues do their bookkeeping may work for them, but it certainly would have possibly its limitations for you as a business owner that runs a different type of business. With a good bookkeeping system, in summary, we can plan ahead. We'll be able to track all of our income, all of our expenses. That would help us to minimize a tax bill at the end of the year. Just be persistent and consistent with it, and you should have some great success. So that concludes our presentation of how to make tax time a breeze through an effective bookkeeping system, and I'm just wondering if there are any questions on anything.
Thank you so much, Angela. That was really, really helpful information. Does anyone else have any questions? Feel free to type them in at this time. You have a free service from an accountant right here in front of you. So take the opportunity to ask your questions. And as I think Angela said, you might think it's specific to you, but most likely there are others who have a similar question or issue with their own business. So please take a minute and type in whatever you'd like there. And I just want to reiterate, I think one of the tips that you provided is something I know I've shared with other businesses, kind of at a minimum to try to set up the bank account for your own business and get your cards set up to that account. And so that way, even if you're not organized with your physical paper, at least that backup is there. I think that's a very good basic, absolute minimum type of activity someone can do, and then build on the paper organizing as you go. So that was a great tip, Angela. Any questions at all? Here we got one. All right. Are the bookkeeping and tax rules similar for sole proprietors and LLC?
So that particular question, it would depend upon the type of LLC that you are. And if I get technical, just put another question out there. But there's two types of LLCs. Very quickly, there's a single member LLC and a multi-member LLC. So if you're a single member LLC, the government sees you as a sole proprietor. So the answer to that question would be no, that the bookkeeping and tax rules for a sole proprietor versus a sole member LLC, a single member LLC, are not different, because you would be filing the same tax form at the end of the year. If you are a multi-member LLC, your default taxation is a partnership, and so at that point in time you would need to file and report as a partnership and follow the rules that go along with that type of entity.
All right. I think that was clear, but feel free to have a follow-up question if you had more question on that. All right. That was clear, so that's good. Any other questions from folks in the room online? All right. We will wrap it up here. Thank you again, Angela, so much for the presentation. As we noted, this will be recorded and available, so you can review these tips and suggestions as well as the valuable information and share it with your friends, colleagues, whoever you'd like. It should be up on slcchamber.org within the next week or so, and we always try to share them through our weekly e-bulletin as well. Thank you to Angela. Thank you to Laura Perry at Clarkson for hosting again. If you can, please, before you log out, just click on the link on the left-hand side for the webinar feedback and enter your information there. There's also an opportunity to suggest topics in the future. I'm always looking for presenters and good topics, so if anyone's interested in presenting, please get in touch with me about that as well. Next month, we have a speaker on constant contact, which is an email marketing platform. So a specialist will be sharing a number of different tips to help reach customers through constant contact email marketing. And that will be the first Wednesday of the month. We always try to make it the first Wednesday unless there's a schedule conflict like this month. So please mark your calendar for September 6th at noon, and we'll get the registration up and distributed through our e-bulletin as well. If you are not receiving our weekly e-bulletin, please feel free to make a note in the comments or on the feedback form, and we can get you added to that list. It's a great way to keep members informed of everything that's going on, not just at the Chamber, but other resources and opportunities for you throughout the county and the region. All right, thank you all again for joining us. Thank you, Angela. I hope you all have a great day, and we will hopefully see you soon. Take care, everyone.
Thank you, Brooke. Thank you, Laura.